For months, Russia's economy has been described as strong, resilient, stable, even thriving under pressure. But that story depends on what you choose to measure and what you choose to ignore. Because when you look beneath the surface, the narrative starts to crack. Headline numbers can make an economy look healthy. Exchange rates appear stable. Official growth figures look manageable. But economic strength isn't just about what S reported. It's about how much effort it takes to keep those numbers in place. In Russia's case, stability is increasingly being maintained through intervention, controls, and heavy state spending. Those tools can work for a time, but they come with costs that don't always show up immediately. In this video, we're going to break down why this strong economy narrative is becoming harder to sustain. What's holding it together where the pressure is building, and why the gap between appearance and reality is starting to widen. To understand why this narrative exists, we need to look at what's being highlighted and what isn't. Supporters of the strong economy story point to stable headline indicators, a managed exchange rate, controlled inflation, and official growth figures that suggest resilience. On paper, those numbers look reassuring. But these indicators don't operate in isolation. In Russia's case, they are being held in place by a set of policy choices that prioritize stability over efficiency. Capital controls limit how money moves. Interest rates are used aggressively to discourage pressure on the currency. And state spending fills gaps that would otherwise be exposed. None of this is unusual in the short term. Many countries use similar tools during periods of stress. The issue is duration. When emergency measures become permanent, they stop being signs of strength and start becoming signs of strain. That's where the narrative begins to weaken. Because the more effort it takes to maintain stability, the less meaningful that stability becomes as a signal of underlying health. Now let's talk about cost, because this is where the narrative starts to feel thinner. Maintaining stability isn't free. Even without precise figures, it's clear that Russia is committing significant and recurring resources to support its currency, manage capital flows, and offset pressure from sanctions and war-related spending. These are not one-time expenses. They repeat month after month. The trade-off is opportunity. Money used to maintain short-term stability isn't being invested in long-term growth. Infrastructure, productivity, and private sector expansion take a backseat while resources are diverted toward control and containment. There's also a structural cost. High interest rates and prolonged controls discourage private investment. Businesses become more cautious. Innovation slows. None of this triggers an immediate crisis, but it quietly reduces the economy's ability to generate future growth. And that's the key point. A system can look stable while becoming less dynamic underneath. When stability requires constant intervention, it stops being a sign of strength and starts becoming a sign of rising pressure. So where does this pressure? That doesn't cause an immediate breakdown. It causes misallocation. Capital flows to where it's protected, not where it's productive. And that slowly reshapes the economy in ways that don't show up in headline data. One of the most underestimated risks is how difficult it becomes to exit these policies. Once markets expect intervention, the absence of it becomes a signal. Once controls are normalized, lifting them can feel destabilizing. And once spending is used to fill gaps, reducing it exposes vulnerabilities that were previously hidden. That's how temporary measures turn into long-term constraints. Not because they fail, but because stepping away from them becomes riskier than continuing. It's important to be precise here. This isn't about predicting sudden collapse. Economies under pressure often endure for long periods. They adapt, redirect, and absorb shocks. The issue isn't survival. It's performance. An economy can function while becoming less flexible, less innovative, and more dependent on control. That's the cost of maintaining stability through force rather than confidence. So the real question isn't whether Russia's economy can remain stable in the short term. The question is whether the tools holding that stability together are quietly reshaping the economy in ways that reduce future growth and increase vulnerability to shocks. When strength requires constant intervention, it stops being a signal of resilience and starts becoming a measure of how much pressure is being absorbed. So if the pressure is real, why does the strong economy narrative still hold? Because the indicators people see most often, exchange rates, headline inflation, official growth numbers, are also the ones most directly managed. When those stay stable, it creates a sense of control. But economic strength isn't just about outcomes. It's about how much effort it takes to maintain them. And in Russia's case, that effort has been increasing. On the surface, stability suggests resilience. Underneath, it reflects growing dependence on intervention. Over time, that gap matters because it changes behavior. Policymakers start prioritizing short-term control over long-term efficiency. Capital flows towards safety instead of productivity. And the economy becomes more rigid, even as it appears calm. One of the biggest challenges is that these policies are hard to unwind. Once markets expect intervention, stopping it can create pressure. Once controls are normalized, removing them feels destabilizing. And once spending fills structural gaps, cutting it exposes weaknesses that were previously hidden. That's how temporary measures turn into long-term constraints. Not because they fail, but because exiting them becomes riskier than continuing. This isn't about predicting collapse. Economies under pressure can last a long time. The real issue is efficiency. Stability achieved through constant intervention reduces flexibility, limits growth, and increases vulnerability to future shocks. When strength has to be maintained at rising cost, it stops being a sign of resilience and starts becoming a measure of how much pressure the system is absorbing. If you want to understand how economic narratives are built and how they quietly weaken under sustained pressure, stay with the channel. In the next video, we'll look at where this pressure could surface next and why managing appearances gets harder as the underlying costs rise. If you want to understand how economic narratives form and how they quietly unravel under sustained pressure, stay with the channel. In the next video, we'll look at where this pressure is most likely to surface next and why managing the narrative becomes harder as the underlying costs keep rising.